Hi, everyone. We would now like to spend some time talking about if there is a joint control and there is a joint arrangement, then how should that be classified? You would recollect that we talked about a joint operation. Let's use the acronym as JO, and we talked about also a joint venture. Let's call it a JV. Okay. So how do I understand? How do I understand whether a joint arrangement falls within the meaning or the definition of a joint operation, or does it fall within the ambit of a joint venture, right? Why do we need to understand this? Is because the accounting and the reporting requirements are considerably different for each of the categories, right? So in real life, it's a very, very critical question for organizations to understand whether the joint arrangement that they're getting into, right? The JA that they are getting into, is it a JO or is it a JV? Okay. So before we get into the technicalities again, let's try and understand. When I say the arrangement works like this, that there are, let's say, two entities, which, for example, are involved in contributing assets, all right, managing or assuming liabilities or other resources, right? You're somewhere looking at that their contribution is not only money, okay? Their contribution is towards the activities of the business or the operations of the business. Okay. So imagine if I say that there is a company X and there's a company Y, right? They both get into an arrangement. They both collaborate with each other where, for example, they are constructing a metro stretch. Okay. So there is a line that needs to be placed for let's say for the construction of this metro line. Okay. And say for the sake of argument, around 30% of that stretch would be the responsibility of company Y, and the remaining 70% would be managed by company X, right? So what you observe is that they are involved in the operations. Okay. Or another way to look at it is, again, the same example, that there is a stretch. This could be, let's say, for the sake of a number, only 50 kilometers. All right. And this is again the same as 50 kilometers. Okay. Now, company X has an expertise in the machinery, okay, and the equipment in the business of, let's say, these infrastructure, right? So what company X says, that I will take the responsibility of 100% of the assets, okay, and the managing that operation, the management of those assets, the maintenance of those assets, the upkeep of those assets, right? I should be able to contribute also by bringing the right set of labor, the right set of people to ensure that the operations are successful. Okay. So this could be the role of company X. So in a way, we are saying company X is bringing all those non-current assets and the operations. Company Y, on the other hand, is managing the funding. Okay, managing the overall financing of the business, and also, let's say, would be dealing with the administrative tasks. All right. Now, these may all be relevant activities for that particular business. Okay. So when you look at all these aspects, we are saying that while company X is involved in managing and bringing the non-current assets and the operations side of it, company Y is looking at the financing and the administrative tasks. Again, this is a classic example of operations being managed. There's an active participation by those parties. There's an active participation by the parties to ensure that the business is running, and they're jointly contributing in one way or the other. Okay. So what are we trying to say is that for something to be classified as a JO, a joint operation, you're looking at where the parties are involved in contributing the assets, assuming liabilities, ensuring revenues, managing the expenses, and everything. That is where that joint arrangement would fall in the definition of a joint operation. So the active involvement is the key. Okay. But on the other hand, if I say that there are two entities, A and B, right? And their objective is that, for example, they are contributing to the net assets of the business. There's an investment of funds, so they are contributing to the net assets, and they are not actively engaged. They're not actively involved in the operations. Okay, so they are in that case would be entering into an arrangement which is referred to as a joint venture or a JV, as we want to call it. Okay, so this is broadly the line. This is broadly the way you try to understand what is that joint arrangement type. Is it a joint operation or is it a joint venture? Okay, and that is where this discussion we want to bring with the help of the following slides. It says that when you are classifying a joint arrangement, it may either be a joint operation or a joint venture. And for that arrangement to be called as a joint operation, there are several criteria to be met. If those criteria are not met, then the default category is a JV or a joint venture. Okay, so let's have a look at, let's try to understand what are these criteria. We are saying the legal form, contractual terms, and other facts and circumstances. So it's a very, very open-ended, part that you don't only look at the clearer picture, the aspects on the legal form or the contractual aspects, but you also take into consideration other facts and circumstances. So this could be more a form based, but this is the principle based, and that is what makes it a little more complicated in real life. Thankfully, from an examination standpoint, it may not be very, very typical. Okay, so let's try to understand these aspects, what they intend to say. It says that, does the legal form of the separate vehicle give the parties right to the assets and obligation for liabilities relating to the arrangement? All right. Now, the one new term that we hear is a separate vehicle. Now, what is a separate vehicle here? Okay. We say if there is, let's say, a business operation or a branch or maybe another entity, right, which could be a corporate entity like a company, or maybe a partnership. It could be anything. Okay. So does that separate entity clarify, suggests that the parties have a right to the assets and the obligation of liabilities with respect to the arrangement? Simply put, is there a separate entity which is there, and with respect to that entity, the assets and the liabilities of that entity, that separate vehicle, are they clearly distinguishable between who are those parties who would be contributing and managing and responsible for the assets and the liabilities and other elements of the financial statements of that vehicle? Okay, that is something which is need to be understood, right? So if the legal form suggests that yes, there are multiple parties, so there could be an A, B, C, D, E, and many more, right? So they together, let's say, talk about an arrangement, okay, and that arrangement is, clearly suggesting that these assets belong to A and B, liabilities probably relate to C and D, the operations are to be managed by E, etc. That is where they would be taking the shape of a joint operation, right? And that's where it has to be. Yes, if the legal form suggests that, right, that's where it becomes an example of a joint operation. Okay. Now, if that is not available, if the legal form is not available, okay, we are saying that whether the contractual terms of the agreement, okay, suggest that right to the assets and obligation for liabilities relating to the arrangement. So even if, for example, let's say the legal form doesn't suggest it, right? Okay, there's no separate vehicle associated, then do the contractual terms suggest that if there are multiple parties getting into a joint arrangement, are the rights to the assets and obligations to the liabilities pertaining to those arrangements are identifiable, okay, to each of those parties? Even that would be an example of a joint operation. Okay. But not just this, not just these two aspects, you also look at the principle based information where it says that is the arrangement designed so that the parties have a right to substantially all of the economic benefits of the joint arrangement. And the the joint arrangement depends on the parties on a continuous basis for settling the liabilities. The whole idea is that you are suggesting by all these instances that essentially the parties to the joint arrangement are actively engaged in the business. The parties to the joint arrangement are actively engaged in the business, right? They are not merely an investor in their capacity. Okay, they're not merely an investor wherein they look at, I have made an investment of this amount and this is what I'm going to get out of that. This is the return I'm expecting. This is the value creation I'm expecting. That is not something which is which is going to be the nature of a joint, operation, for example. So essentially what I was trying to bring along is that under a joint operation, you would witness, right, that the parties contribute actively to the assets they assume, liabilities and other resources to the joint arrangement. So there could be a joint arrangement wherein you're talking about, the different assets and liabilities, but then somewhere those assets and liabilities do not totally relate to the joint arrangement, right? They would relate to the parties in terms of managing those or controlling those. That's how you start looking at it. Okay. If, for example, the joint arrangement does not look at the contribution on the assets or the liabilities, but there is an interest in the net assets, right? I'm putting my money, you manage. I'm putting my money so that the money grows. I'm not really concerned in the decision making with respect to the management of the assets, contributing towards the assets, assumption of liabilities, running the operations, etc. So when you look at that passive interest, okay, and I don't intend to say that you are not doing anything. Your money is still there. Your interest in the business is confined to the net assets, not specific assets or liabilities for the sake of argument. Okay, that is where this is going to be an example of a joint venture for us. Okay, we should be looking at some broader examples wherein it is provided in terms of how do we connect with whether some joint arrangement is an example of a joint operation or is it an example of a joint venture. Okay, let's have a look at this. The example suggests that there are three separate aerospace companies which form an alliance to jointly manufacture an aircraft. And they carry responsibility for different areas of expertise, such as manufacturing engines, manufacturing fuselage and wings, and aerodynamics. Now, importantly, before we move further, we are provided that there are different expertise available with the parties. There are three separate entities, of course, right? And there is an alliance within, there's a joint arrangement, right? And they are individually responsible for different things. That hints that we are talking about an operation. Okay, let's look at it further. Now, they carry out different parts of the manufacturing process, each using its own resources and expertise to manufacture, market, and distribute the aircraft jointly. They share the revenues from the sale and jointly incur the costs. The revenue and common costs are shared as agreed in the consortium contract. Okay. The parties also include their own separate costs for labor, manufacturing, supplies, inventories, and the WIP, and each party recognizes its separately incurred costs in full. The question is, would the arrangement be classified as a joint operation? What do you think about that? Okay. Again, we are highlighting the fact that there is indeed, the contractual terms, and also you're looking at interest in assets, liabilities, plus, of course, the facts suggest that each entity, right? Let's put it here. Each entity has a role in determining the operations. You're talking about also, for example, contractual terms validating, that each party contributes to the operations, right? Each party contributes to the operations. There is a defined or agreed share of assets, processes, resources, revenue, expenses, and profitability, and even more. Okay. So given all these scenarios, given all this information, we should be able to assess that this joint arrangement is indeed an example of a joint operation. Okay. And that is what is we want to kind of bring in light. Okay. The arrangement is classified as a joint operation because it is not structured through a separate vehicle. Okay. Each party has obligations for the costs, and the contractual agreement, very importantly, suggests or outlines that there's a share of revenue and associated costs on the basis of predetermined agreement. Okay, so all these parameters would suggest that this is an example of a joint operation. Okay, that's something which we wanted to kind of highlight in this scenario. Okay, now importantly, let's try to distinguish briefly in terms of what is the relevance or what is the reference of the legal form here. Okay, there was a mention about the legal form or a separate vehicle. It is explained, for example, let's say with the help of this slide as well. It says that a separate vehicle is a separately identifiable financial structure. Okay, it does not matter whether you're talking about a partnership arrangement, whether you're talking about a corporate entity or something of that sort. Now, the key is that for something to qualify as a joint operation, there should not be any separate vehicle. Okay, right. There should not be any separate vehicle, and accordingly, the parties shall have the rights to the assets and obligations for the liabilities of the arrangement. Okay, so what are we trying to say? That the key distinction, the key difference that you need to assess at all times, that when you talk about a JO, you have the rights to the assets and the obligations for the liabilities. The moment you talk about a JV, a joint venture, parties have a right to the net assets of the arrangement. Essentially, we're talking about the equity, not an involvement in the operations of the business. Okay, what you need to also remember that if there is a separate vehicle, it may still be, right? There may still be a joint operation. Okay, but then if there is no separate vehicle, then it is essentially a joint operation. Okay, so simply put, in case of a separate vehicle, right, if it is present, okay, it may either be a JV or a JO. Okay, but if it is absent, it has to be necessarily a joint operation or a JO. That's how you start analyzing that part. Of course, the question arises when it is present, then it can be either a joint venture or a joint operation, which suggests that the legal form is not the only factor. Of course, it's an important factor in classifying whether that joint arrangement is going to be a joint venture or a joint operation. Okay, so what we're trying to say is that under the joint operation, the legal form of the separate vehicle does not confer the separation between the parties and the separate vehicle. But of course, when you have it available, you would be able to classify that there's a separate vehicle which has its own entity. Okay, irrespective of the the legal structure of that entity. All right, that's something which is the point we wanted to highlight or distinguish in this case. Okay, so let's say, for example, in this case, it says that two parties structure a joint arrangement in an incorporated entity. Each party has a 50% ownership interest in the incorporated entity. The incorporation enables the separation of the entity from the owners, and as a consequence, the assets and liabilities held in the entity are the assets and liabilities of the incorporated entity. The question says, what is that type of arrangement? Identify that. And secondly, if the parties modify the feature of cooperation through a contractual arrangement such that each party has an interest in the asset and obligation for the liabilities, does it change, for example, the type of the joint arrangement? Okay. Now, what do you assume here is that, or what you identify is that, given this scenario, right? Let's look at the first instance. What is the type of the arrangement originally? We are saying that the parties have structured the joint arrangement in an incorporated entity where each of the parties have the 50% ownership interest. And what I was saying is that whatever are the assets and liabilities of that separate entity are those of that separate entity altogether, which simply means that in this scenario, the parties have the interest in net assets of that separate vehicle or that incorporated entity. Okay, so simply put, the original type of arrangement suggests a JV in place. All right, the moment I look at the second scenario, okay, we are provided that if the parties modify the feature through a contractual agreement, that each has an interest in asset and each is liable for those liabilities. Now, in the second case, we are referring to that there's an interest in assets, all right, and obligation for the liabilities as well. Now, this is the second scenario, okay, which clearly suggests that we are talking about a joint operation in this scenario, right? The contractual terms clearly identify that the rights to the assets and obligation for the liabilities, they come together as far as the second scenario is concerned. Okay, in the first instance, it is the net assets. So that is where the interest lies of those parties. And that's something that we wanted to discuss in this scenario. We have provided that on assessment of the rights and obligations conferred upon the parties by the legal form of the separate vehicle indicates that the parties have the rights to the net assets for the arrangement, which means it's a JV, right? But in the second scenario, when there is a modification, so that each party has an interest in the assets and each party is obliged to meet those liabilities, which may suggest or which may result into the arrangement to be considered as a joint operation. Okay, that is something that you want to understand. From an examination standpoint, these instances could be critical to analysis, right? And in real life as well, by the way, you land up doing these kind of assessments because the accounting would vary depending on whether the joint arrangement is a joint operation or a joint venture. Okay, so when we look at these aspects, now there could be a typical scenario, but something that we have discussed at length already. In case of a joint operation, for example, discussing the contractual terms, the terms would suggest that all the interests in the assets are in a specified proportion to each of the parties. Now, importantly, it does not mean it is equal. That is not correct. It can so happen that, let's say, if there are, let's say, three parties, party A, B, and C, maybe 80% of assets are managed by A, 20% by B, nothing by C, or it could be 100% by A, nothing by B or C. Okay, but from the liabilities perspective, there could be a defined proportion. So maybe B is involved in the, bringing those 70% of liabilities and 30% to be borne by C, whereas nothing is to be contributed by A. There could be such specialized businesses which have the skill set, for example, to arrange for the assets and of course bring those liabilities into that joint operation. Okay, so that is how you start looking at that. Somewhere the different parties are involved or responsible for arranging these assets and liabilities in a specified proportion. Okay, and that is where you start looking at those parties have specific rights and specific obligations from the perspective of the joint operation. But the moment I say it's a joint venture, they do not have any direct interests. There's no ownership, there's no right, there's no title in the assets, right? We rather want to say there is no control to the assets. No party individually has a control to the assets. Similarly, they are not liable for the debt or the obligation for the arrangement. Okay, it is only confined to the extent of the investment made, right? That is where you start looking at. Essentially, a joint venture talks about the net interest in that business or in that arrangement. But a joint operation is not just about the assets, but also liabilities separately. That's where you start distinguish between what could be a scenario for a joint operation within the joint arrangement versus a joint venture within the joint arrangement. Okay, let's have a look at this example. It says that H and R enter into a contractual arrangement to buy a 2-story music store, which they would lease to other parties. Okay, H will be responsible for leasing the first floor, R will be responsible for leasing the second floor. They can make all decisions with respect to the respective floors and keep all of the income with respect to those floors. The ground floor will be jointly managed. All decisions and with respect to the ground floor must be unanimously agreed between H and R. The question is, discuss the applicability of Ind AS 111 in the above case. Now, essentially, we're talking about floor 2, floor 1, and the ground floor. Okay, we have provided that H is managing the first floor, R is managing the second floor. So this is with R, this is with H, and this is managed jointly, right? The moment I say R singly manages that, the control lies with R. So this is not covered under joint arrangements, right? It is not within the scope of Ind AS 111. Okay. Similarly, if H controls the first floor, this is also not covered under joint arrangements, which is Ind AS 111. The moment I say I'm looking at the ground floor, it is jointly managed, and so we are talking about collective control and unanimous decision, right, by both H and R. So this becomes an example of scoped within or scoped under Ind AS 111. Of course, it's important to assess whether this joint arrangement with respect to the ground floor would be a joint venture or a joint operation, right? It all depends on those contractual terms, whether they are both managing it, jointly. If they are managing it jointly, it becomes a joint operation. But if they are purely have a vested interest in the investments made in ground floor, right? In that case, it would be an example of a joint venture per se. Okay. And that is something that we are trying to say. The three elements: first floor is controlled by H, so it's not accounted under Ind AS 111. Second floor is controlled by R, not accounted for under Ind AS 111 again. So these would be, of course, falling within the perspective of Ind AS 16 very likely, or let's say if it were a business from the definition of business perspective, then naturally Ind AS 103 and Ind AS 110 would be applicable. But as far as the ground floor is concerned, that the control is an example of a joint arrangement here. Okay.